Stuff real quick for everybody that's online and here. We are already recording this, so just be aware of that. It will be cropped for when we send the webinar out. But try to minimize any background noise if you can, and try to speak only one person at a time because the camera will be focusing on the speaker at any given time. So just keep that in mind, and we'll go through a little intro. Jamie will do his presentation, and then we'll move into a little structured Q&A and open Q&A. So, all right. Anybody have any questions before we get started? All right. Well, thank you everyone for joining us for this webinar about heat stress coverage. Really excited to talk about this innovative topic with you all. I'm Robin Smith. If you don't know me, I'm with DFA Insurance, and we'll go into the agenda real quick. So we're going to do some introduction, and Jamie's going to cover the heat stress presentation, and then we'll do some Q&A here at the end. So it's my pleasure to introduce you to Jamie Luce. He is the CEO of Air Parametric. Him and his team developed this milkshake product to address the issues of heat stress on the farm. And just really excited to have you here, Jamie.
Well, I appreciate it, Robin. It's really great to be here. I want to thank everybody at DFA for having me in here. And we are quite excited about milkshake and working and helping dairy farmers, and couldn't be more excited about partnering with you all. So thank you very much. I'll go through the presentation. As Robin said, I'll probably try to drop as many details in there as I can, and then we'll try to run through that and get to some Q&A and let everybody have a crack and ask some good questions. So we'll get into it here. That's our beautiful little logo, and let's get into the whole concept of heat stress and why it's important. I think, when I talk to folks who understand dairies like you folks and your customers, heat stress and thermal comfort, something that all of the farmers are worried about, they're living with, and they're dealing with. So I'm never going to come and talk to them about its implications, but remind them that heat stress particularly is going to drive quite a bit of negative impacts, right? So there's all kinds of issues with behavior and health and immunity, but then there's really long-term challenges with reproductive aspects, gestational cycles that can really have an impact both short and long term on a farm. And then that's even before you get to the immediate and obvious aspects of reduced quality and reduced fluid milk that is very apparent to them within a few 24, 36 hours of an extended heat stress event. And so my team and I really got interested in this subject of building an insurance policy when we learned about the notion that this was such an impactful issue for dairy farmers, but there wasn't any kind of financial insurance solution to help them out. And the tools that we use at Air Parametric allow us to underwrite the weather and help the farmer by providing some financial assurances under these kinds of situations. So let's get into this a little bit more. When you get into the concept of heat stress and understanding its implications, we didn't create that understanding. Again, I'm not a farmer. Every farmer has been dealing with it, but there's been plenty of studies. Lots of ag extensions have gotten in there and defined heat stress and looked at its relative impacts to the farm. And what they've created is something called THI, which is a index of both the temperature and the relative humidity, because as everybody understands, I think, who lives and works outside in the US, if you go outside and it's hot, but it's not very humid, that's tolerable. But man, when you layer on that humidity on top of it, it gets really uncomfortable. And I think most farmers know, their animals are not comfortable when those kind of conditions are persistent, and that creates degradation of their fluid milk. It creates all of the quality challenges, and then ultimately leads to some of those other things I mentioned. So they created an index called THI, which generally speaking starts to become impactful around the number 68 or 70 on the THI scale. And then as you go up in terms of 70s, mid 70s, and low 80s, you're talking about really, really damaging THI to the animal. And the studies that have been done, this one I'm crediting here to the University of Minnesota Ag Extension, looked at, anywhere between 2.5 pounds per day up to 10 pounds of milk loss per day, depending on the type of heat stress that the animal is dealing with. And there's obviously a range here because of the animal's genetics and the actual intensity, but every farm knows there's a pretty significant impact to them when they deal with these kind of events. And I try not to get everybody's mind looking at this reference chart early. That's why I put the little blue thing on there. But temperature and relative humidity, when you just put those two things on an index chart, you can see, 90 degrees Fahrenheit temperature at 10% humidity is only a 74. But if you layer on 30 or 40% humidity, you get close to 80 very quickly. And so this is an issue that impacts pretty much farmers in all regions to some extent, although there's differences in their humidity levels and their heat levels. But at some level of heat and humidity, generally speaking, all farms are dealing with some lost milk and some long-term behavioral and reproductive issues. So again, THI is the way it's been defined by science, and you'll see how we've indoctrinated and incorporated that into the product that we provide. One thing that my partner, Ed Yorty, who's actually a former CEO of an insurance company but started as a meteorologist, will also tell you is that THI doesn't exactly track to the heat index. So a lot of people see that on TV in the morning and say it's going to be a warm day. And that's because of the way the scientists decided to create the index. So it's definitely it's a similar type of measurement, but it's not relevant to our product because we're looking at THI. So I typically try to bring this up. THI is always going to be less than the ambient temperature, as the heat index can be significantly lower or higher depending on the way that the index was created. So THI is our focus. There are other ways to look at heat stress, and there's other models that have been created in science, but THI tends to be the one that most dairy farmers reference. Okay, so how do we know and why do we think it's a big deal? There have been some studies, and we've pulled some information from some of them that have tried to articulate how much economic damage is done for a farm under certain heat stress conditions, under certain THI heat stress. So Red Rock Dairy is actually owned by one of our customers and somebody we worked with for several years to build the product. And this study we did where we looked back at the temperature and humidity by hour for 50 years of their farm's history to come up with these numbers. What this graph will show you is that on average for his farm, and this table is referenced in dollars. So along the left side there, you're looking at millions of dollars. At the time that we did the study, his farm was roughly 2,700 head. He was doing around 15 million in revenue. And his average baseline for loss on an average year, before he thinks about his mitigation techniques, the THI is driving about $1.5 million of loss on average every year. So roughly 10% of his general revenue is at risk due to heat stress. And more importantly, the low on that in a great year, I think that's somewhere in the early 2000s there, was only 1.1, but he dealt with years at 2.36. The range is pretty significant. And it's also something that's tied to weather that he can't predict. So the genesis of the product, to be very candid, was my conversations and my team's conversations with John Vanderpool and some of his friends and people that farm in his community about how do you deal with this? And the answer was, we just ride it. We don't have another solution. And that's when we started looking at how do we build an insurance product that actually gives them some support here. So again, I'm not going to get into all the ways in which dairy farmers deal with heat stress to try to mitigate it. That number that I showed you before was sort of a calculation before you think about what he does every day to try to mitigate, keep some of his milk from losing it, keep his animals cool. Obviously, farmers are using all sorts of solutions, from fans, sprinklers, and improved barn facilities and tons of water. There's a myriad of solutions that they're using. But all of these have some degree of cost, both operational and fixed, and they don't solve the problem. They don't completely make it go away. They just sort of keep it from getting out of control. And under really extreme scenarios, these things can basically not get much done at all because they just run out of gas, so to speak. And so what we did in our world with working with John and some of his farmers is started to think about how does the farmer need to think about heat stress in the context of their business. And while everyone knows it's going to impact them, because there really weren't a lot of tools in their tool belt from a financial perspective, I'm not sure anybody's ever looked at it this way. But we built this little bit of a risk management graph to help them think about how do I think about the mitigation and the impacts and the costs. And this isn't designed to be perfect, but just to be representative to help somebody think it through. So if you're in the mild heat stress arena and you're running shade only, you don't have any other systems, you don't have fans, you don't have sprinklers, you're going to get some support from having shade out there to keep them and let them cool off, but it isn't going to help you when it gets really warm, because they're not going to be able to cool down just by sitting under the shade when it's really humid and it's warm overnight. Same is true, if you're just throwing lots of water at them, that's going to help you, but it's not going to solve the world's problems. Sprinklers and fans are going to give you more value, again, but it's also going to cost you more if you look at that left side to run those, keep them maintenance, and it's also not going to keep the most extreme events from having an impact. And then even building and putting all the money into a very specialized barn isn't going to solve the problem, but it's going to be very costly on the CapEx. And so you get to this world where, I can spend a lot of money if I'm a farmer to try to solve it or minimize it, but it's super expensive and I still have some risk. And then if I don't spend any money on it, I'm at significant risk summer to summer. That's really what you look at. And so when we sat down and said, how can we help? We took a look at it this way. We looked at that right side and thought, how can we provide something to help any farmer fill some of that gap? And that's how we got to milkshake. All right. So milkshake doesn't cover everybody's entire heat stress because some of it is just so routine that we can't insure it, but it gives them some financial backstop to the risk that they have that they can't control. That's really what it does. Gives them certainty under certain triggering events that they're going to get paid to cover some of those costs. And I did something wrong. There we go. So we like to think of it as a flexible tool to allow the farmer to mitigate some of that exposure they can't control. They're doing their best. They've got some things in place. This helps them where they can't help themselves. And it's going to cover any financial loss they deal with. This is really key. They lose milk, if they lose quality of milk, and even if it's just that they're spending so much on running their systems that it's driving a lot of the additional operating expense, it's going to pay. The policy is not designed to cover loss. It simply pays for the heat when it reaches a certain threshold. So it pays for anything as long as the customers had some aspect of lost milk, reduced quality, or some sort of additional expense. Anything like that is going to be covered. So we're trying to create the certainty of an outcome once the THI or triggering index is covered or met. So we see the product out there as a complement to the other types of products that you all are already selling and all the customers are already looking at. They obviously have a lot of assets they have to protect, their equipment, their barns, their animals. They also have to be conscious of market price, and that's what DRP and some of them price hedging solutions help them give them. Milkshake is a new product that complements this by helping them minimize their operational risk. Because heat stress is an operational risk that can depress their revenues and increase their costs. This is a new tool to help them try to minimize some of that. Again, I'll double down. Any financial loss, that's exactly what it says in the product. It's not about the coverage and what you said is your loss. It's going to pay parametrically for the triggering event. So it makes it very certain to the farmer that they're going to get paid exactly what the contract says if the triggering event occurs. That's, to us, that's really important because we don't want this to be complicated and we want it to be very simple, and we think we've achieved that. There's always some complexity, but for the most part, we believe we've made the contract very clean and very simple. And when the contract performance is designed such that claims will be monitoring the weather, and when there's a claim event, we will let the farmer and you all as their agent and counselor know about it immediately. And there's a simple document that they just have to attest to the loss. Once that loss attestation is made, we will immediately process the payment to the farmer. So there's no adjuster, there's no let me see your milk checks, show me your utility bills, I need to understand what your exact loss is. It's parametric. The payment is predetermined, and as long as they attest to a loss of any kind, like we talked about, the payment will be made. Okay, so this slide's got to be built out a little bit. Okay, so very basic benefits, right? You're going to get payment from any loss, like I said, from a loss from a heat event. It's going to be customizable. We'll go through that. It's not a one size fits all. It's going to prove their price hedging. And this is what I mean by that. If somebody buys DRP, if somebody's buying any other price hedging solution, when they do that, they're counting on bringing milk to market. If they don't bring milk to market, that price hedge has less value because they had to pay the price hedge and then don't end up bringing as much to market. So part of what this does is dovetails nicely in support of that if they bring less milk to market, strengthens their overall hedging process. As I said earlier, very clear payouts and thresholds, no adjustment. There's no question what will happen. The payments are fast. They're going to happen within the summer while they're actually dealing with the event. They can have multiple coverage triggering events in the same summer. So there's lots of things like that. And it's built on local data for their farm's history. So the information we're using is designed for their farm, and that's part of why it's simple to talk about, because the premiums and limits are fairly simple, and the only thing that really is different by location is the actual triggering levels of THI. Okay, so we'll get into some details real quick. This is a mock-up of a proposal, and I'll just orient you to a little bit of it. In the upper right, let's start with that for a second. We have a green marker on the customer's location, and then 3.4 miles away is the very precise data point that we are looking at and getting the information to understand the THI. So I'm going to pause on that for a second. We get this information from a government-run organization called the European Center for Medium Range Weather Forecasting. It is, think NOAA, but the European version. It is the global standard. Unfortunately, I wish it was NOAA, but it's the global standard for weather data across the globe. And they are monitoring points everywhere throughout the country and throughout the world. And we pull the closest point that they're monitoring, and we take that data. So we take their temperature data, we take their humidity data, and we calculate it. And so it's not Air Parametric telling you what it is. We're using the third-party government data, and we are monitoring the contract off that. All of our pricing is built on modeling from the history of those data points, and then the way in which we actually monitor it is the same. So we're not using different kinds of data. It's all one data set, and we get that data every day, look at it, and report it back to the customer. So in this case, this is a real customer, but we did change it. Their location is very much close to it. I'd say on average, our customers are about 5 to 6 miles away, which in dairy world isn't that far because we're not talking about mountains and different elevations. It's generally pretty much similar weather. The furthest a dairy farm can be away from a location, I think, is about 14 miles. We rarely see those. It's usually a little close, more like 5 to 10 miles. That big long code is a geospatial data code that actually is assigned to that little blue point. That's just for the contract and to be very specific. Again, in our contract, it's really clear we're monitoring the ECMWS weather data and providing the reporting and monitoring off of that information. So it's always very clear. That information is public and free, and it's not easy to get because it's a government website, but if the customer ever wanted to see it, we can pull down the raw data and show it to them. So there's no black box of what was the weather. It's actually a third party's information. And that's pretty important because we don't ever want anybody to think we crafted the weather understanding. It is crafted by a third party. Okay, so let's start with limits. In this case, the limit it's shown here is 100,000. What does that mean, and how did we get there? What that means is for the maximum 7-day event occurrence, they will get paid $100,000. That means that if for 7 days the trigger was above that, that's a rolling average. That trigger is built on a rolling average of every hour over that 7 days. If that triggering event occurs, they will send the claim notice. If assuming that the customer says I had a loss, because 7 days is a long time, we will pay the $100,000. That's simple. We're not going to ask any more questions. There isn't a show me the loss. Again, just going back to how simple it's designed to be. So the certainty of outcome is embedded in that. How did we get to 100,000? In the maximum we will allow the customer to insure is 50% of their weekly revenues. So we can get to that number very basically. They can show us tell us what their milk weights were for the last 12 months. We take it divided by 52 times half. You can tell me how big the milking herd is. We can do some estimates. It just needs to be in the ballpark. The point is, we know that milk production doesn't go to zero. So we can't allow them to insure all of their milk as if they lost every drop of milk. That doesn't happen. That's not what's supported by the studies. And we also can't allow them to insure production and milk that they don't have at all. So if they're only a 200 head farm and they want $250,000 of weekly coverage, that's not going to be feasible, because that's essentially over insuring them, and we're not allowing that. This is an insurance product, and so there has to be loss and it has to be insurable interest. So that's the only real underwriting we need to do, is how big a farm are they, and that's how we get to the limit. The aggregate limit is simply allowing for more events to be paid in the summer. So in the case of if you're looking at the top blue bar with the high trigger of 7881, the 100,000 limit, which would pay for 7 days, 1 times 3839, they can buy the additional additional 100,000, which would allow for that second event for another $400 roughly. So the coverage options, the base product is a 7-day product. That's what we started with, and then we got feedback that people wanted to actually buy to lower event levels like 3 and 5 day. So what we have is a 7-day product that can be purchased at any of the 4 triggers that we show here. Depending on the location, we sometimes only have 3. Depends on the location. Some we can go lower, some we have to stay above a certain level, depending on the history of a location. But generally speaking, the customer will have 3 to 4 triggering options. And then what they can do is select from 7-day only. So in the case of 7881 at the top, 3839 is the premium for 7-day only, or for the 100,000. If they want to have a triggering event at 5 days, which we can cover, that premium is 6944. It's more because 5-day events are more likely than 7-day events. It also pays only 65% of that initial limit. So if you look at the 5-day location event limit, it says 65. And then the same thing is true. You can add the 3-day event triggering limit, and that premium would be 13,708, again, because increasing the probability of the event at 3 days. And the 3-day limit pays at 30. The 5-day at 65%, and the 100% for 7 days. And all of those charges are independent. So you just pick one. All of those coverages are included. They don't get added together. So if you want 3, 5, and 7 for the high trigger, it's 13,708 for 100,000 of cover, and 15,078 for the additional 100,000. One thing that we try to point out, particularly now that we have multiple days, is how does a coverage event get triggered? We monitor the weather, like I said earlier. If the customer has a 3-day, 5-day, 7-day policy, if they have 3 days that trigger, we will notice that, and we will know that fairly quickly. We will then continue to monitor to see if it gets to 5 days. If it gets to 5 days, we'll continue to monitor to see if it gets to 7. So the only time that we pay out the 3-day is when it's a 3-day and then it cools off, or the 5-day and it cools off. Otherwise we will give them the biggest claim associated with the event. And any day can only be part of one event. So we don't start thinking about overlapping events, days. A day is part of a claim event. Once it's in there, we begin monitoring for the next event, as long as there's limit to be paid out throughout the summer. So triggers, limits, durations, and aggregates. Those are really the choices and parameters. This is the entire product coverage discussion really with the customer. Now this is, and I know it's probably a little hard to see, we provide the historical views for the farm in the proposal. So the customer is probably going to say, I don't know what my THI is. How often does this happen? I don't know. And so what we do is provide them the very data that we use to build the product's triggers. And so what you see here in the top is the actual THI data. And so, you know, you can see the scale of THI on the left, and then each one of those colored lines that are going up and down are the maximum in the summer, 3-day, 5-day, and 7-day for each year. And so you can see there's plenty in that mid to high 70s range, particularly when you're in the 3-day, you're going to see that much more occurrence and more common. The dotted lines in that top, it may be kind of hard to tell, but they're slightly angling up. This one's not as bad as some other ones. Wisconsin, Southwest Wisconsin, not as many, not as much of a steepening as we see in California and some other places, but it's going up slightly. And so what we do on the down on the second slide there at the bottom is restate that based upon adjusting all of those data points for what the weather is like today, because triggering events in 2005 would not be the same as triggering events in 2025 because of the changing patterns and the changing heat, mostly about the temperature. The humidity is not the driving force of that. And so you can look back and say, these are the events that have occurred in the past. What I always try to tell customers is the product isn't designed to pay every other year so you make more money when you buy the product by just getting paid more in payments than you got. What you have to look at is years that are at low and below the triggering thresholds are generally pretty good years. Some of them very good years in terms of the comfort side of the equation. Those are years where their productivity is very strong. And these are the years where a little bit of that productivity gain has to be thought about as the payment into milkshake so that it's there to pay when they have the really bad years. Because I can't tell them what's going to happen in their weather 2 weeks from now, neither can they. What this is designed to do is be there for that summer or the summers that are going to be super hot and create super significant economic loss for them. So the product's triggers are designed for this year to be very reasonably set, and the overall arching product is designed to get more than half of the premium dollars back to loss into a farmer's hands across the portfolio. We don't know which farmer's going to get it. We don't know which parts of the country are going to get hit, but the idea here is you're getting a certainty of a payment if these events occur. But there's relevance in the triggers. All of the triggers are set for their local area tied to their history. And going, forward, we're not trying to pick and make certain triggering premium combinations more beneficial to the underwriter or the customer. They're all set the same way. So there's not really like the right choice. It's really about the choice for them, which is how much budget do I think this is worth? How much risk am I concerned about? And their overall risk management philosophy, because that's going to vary by farm. So that's kind of the details of the product, but I think maybe Robin can talk a little bit about how you guys can integrate with us.
Sure. So I know most people know DFA insurance for our health insurance and our workers' compensation and even farm packages, but this will be a new tool for us to offer, partnered up, with Jamie and Milkshake. So we have 3 account executives. Their names and contact information are on this slide. So if anyone is interested in learning more about the product or getting a quote, I would recommend that you call either Brian, Jordan, or Brian, and speak with them to get in connection with Milkshake. We can move on to
go to the we're really excited. I know we're going to do some Q&A. We'll probably get into some other details, but the product is new. We really appreciate you all learning about it and sort of promoting it. I think we couldn't have found better partners, and super excited and willing to take questions and ideas. We are an evolving company. We're a new company. The product's new. There's a lot of things we can do. We learned a lot from our first proof of concept year, and I'm sure we'll learn more. So I'm happy to take questions.
Absolutely. I don't mind kicking it off.
Awesome.
So have you had a chance to connect with some of our farmer owners to discuss this new innovative product, and what have you been hearing?
Yeah, I think Jordan is on the call. I see his name, but I will say Jordan Wallenberg and I had a nice visit with a few of his farmers last week in southwestern Wisconsin, as it stands. And I'll characterize it this way. First of all, I thought it was great to be with Jordan. He clearly, and the team knows the customer really well. They really listened and really were interested. I see it this way. There's a lot of concern about heat. In fact, I think when we were there at one of the dairies, they were putting up a new barn and a new climate control system in that barn that they were excited about. The issue is very relevant. It was interesting. One of the farms stated that they were very concerned about the long-term gestational issues of, calving, and when calves are when pregnant cows are going through heat stress, what does that mean for their cow 6 and 12 months later and the new calf, which I've heard before. A lot of those costs are hard to understand in the moment when it's happening, which is why the product is designed to pay them immediately, get them out in front, maybe help them mitigate that later. Maybe they end up buying a few more animals to try to deal with the long term. But I thought the farms, were really interested in it, trying to learn, and I really appreciated it.
Are there any characteristics for a farm that may make them more suitable for the coverage?
So, as I was talking about earlier, when we underwrite this, it's about the weather. So actually, we can underwrite any farm, any size. There's only a minimum premium of $1,000. So there may be a size farm where it just becomes too insignificant from a price perspective or a policy perspective. But we're really not asking the farmer to be a better manager of the cows. We already know they are. What we're trying to do is help them with a product that pays them when the weather happens. So we don't actually need them to be a certain type of farmer or be in a certain location. We can offer the coverage to farms of all sizes in any region of the country. And the only thing we need to know from an underwriting perspective is how much limit do they need based upon their size and performance. And the rest of it is all about the location data. So no, the answer is I think all of them are interested. I think even folks that run very sophisticated systems know it doesn't take care of everything, and it's expensive. And so we see people up and down the risk management spectrum kind of looking at the product.
And what could a farm expect in that claims process?
Yeah, so we're already, for our customer, monitoring and reporting weekly the actual THI. So the things they can expect are, once they're on risk, we will start sending them a report to tell them, hey, this is what THI was. It comes a bit in arrears because the data is it's very well qualified and checked for accuracy. So we don't send it to them every day. We send it to them once a week for a week in arrears. But once they have that, if there was to be a triggering event, we will immediately send you as the agent and them a copy of the claim notice, pre-filled out. It says, this is the days, these were the event details. Did you have a loss? And the loss question is, did you lose milk? Did you have additional expense? Did you lose quality? Check a box and sign. That would then be returned to us so we can process the claim. But that's pretty much it in a nutshell.
That's great. And then what are I know you talked about some of the key benefits in the slide, but are there additional key benefits or anything else that you'd want to know about?
I think the first thing that we tried to do is make it flexible so that any farmer can find themselves using the product. It's not one size fits all. So if you looked at that premium grid, you can spend quite a bit of money if you really can. It's worth it, and you can spend a lot less money to try to minimize the top end of the risk. And you can even buy less limit than we show you. So I think that's an important point, because the limit we share is only the maximum limit that we can offer. If the customer says, I want to do this, but I want to get a better trigger, but I don't want to spend that much money, I want to lower my limit, you can do that as well. So it's very flexible. we tried to make it flexible without adding so many options that it's overwhelming. We actually learned that last year. We had pretty more options than the farmer and the agent could get their mind wrapped around. So we tried to trim it up, but it's designed to be flexible. We're going to do all the monitoring. You guys don't have to do anything. We're contractually bound to do that. We will monitor it. So we will ensure that everybody knows it and report out on it. You will see those as agents along with your customer. It's parametric, and I've probably said this a couple times already, but we don't know if the weather is going to be bad, but we know if it hits these triggering events, they're going to get paid. That simple. So the certainty of outcome is what the customer's really buying. They're not buying the milk loss. They're buying the certainty of a payment that this will be there if these triggering events happen. And that's why we use this model, and it's a growing index insurance world of parametrics out there. And I think customers are becoming very unsure of what their insurance contracts pay. This is very confident. Everything I showed you is very clearly spelled out in a simple contract, so it doesn't require an awful lot of, well, okay, yeah, you had some heat, but we're not sure what's covered yet. No, I know exactly what I'm getting. And that was important to us and to the farmers we used to build the product. And, we can't predict the weather, but we know what will happen if the weather hits those events.
And what is your website where people want to go and learn some more?
Milkshakeins.com is where you can find a pretty good overview of the product. You'll see some things, some customer testimonials. There's 2 videos on there. One that kind of gives you a very broad, basic, thought of what the product does. I encourage customers and farmers to go there to get oriented first, and maybe watch John Vanderpool talk a little bit about why he thinks this is important. He's a real leader in the dairy world and believes that heat is going to be a real thing to contend with as temperatures continue to rise. And as he tells me all the time, I can't move my farm. So I got to deal with the weather somehow. And he knows he's going to have to put more money into the climate control, but that isn't the whole story. And that's how I came to be here, because you all know I did not grow up on a dairy farm. I came from the insurance world, and but I'm real passionate about the product and about helping. And that Milkshake INS is good. And then you might also watch the podcast at Ag Culture I did with Paul Windmiller as well.
Great. I'd like to open it up if anybody in the room or on Teams has a question for Jamie. This is a great time to pick his brain.
Jamie, this is Sean.
Oh.
Hey, Sean.
How you doing?
Doing well, thank you.
Do you have the radar on your computer?
I don't know. I'm not looking at it right now, but yeah, you're looking for insights on specific locations, that sort of thing?
Well, I was just gonna give you an example of what's happening down here today, out here in the desert region. It's 95 degrees and 17% humidity. Whereabout would that put us on the scale?
See what we could. I don't know if I can go back. Let's see. Sorry for all those little punch through animations that I think I'm so good at putting together, right? There we go. So there you go, 95 and 17. So you're somewhere in that like 78 range right now, like 77, 78 range.
Right.
So the question is how persistent, right? The product, when we built the product with John, and he wasn't concerned about it getting hot. Gets hot every day in Lubbock, Texas. It gets hot. What he's concerned about are the nights that don't cool off, because for the farmer, the animal can deal with the hot day as long as it has time to recoup and wake up in the morning. It's going to want to feed, because it's really the DMI, the lack of intake, because they're trying to cool off, that's driving a lot of their milk production loss. You guys probably know better than me, but so. It's not just if it gets hot during the day, because we're measuring hour by hour. It's the intensity for an extended period of time. But that's where you'd be on that for that moment in time.
So that's the question I had.
Yeah.
You got to be at that point for the 24 hours for 7 days.
Correct. That's the average, right? And so all those weather historicals that we showed were in that context. So we were showing the 3-day, 5-day, and 7-day event that same way. So it's not just like a threshold of the day, it got hot and the humidity reached a certain point. We're measuring 24 times during the day, average a day, put it together, and we stack it next to the other days. And hopefully there's some cool days that kind of break up those real hot days. But when they stack next to each other, that's what the product is really designed to help.
It's gonna be 112
Sean, does that help
here.
you?
Yeah,
Oh,
it's
go
gonna be
ahead.
112 here on Sunday, so I gotta believe the nights will run in the 80s.
And that's, I believe, were you in New Mexico?
I'm in
Or
Arizona.
Arizona. I knew you were Southwest. Yeah, I mean, obviously those kind of conditions are fairly typical. And so the triggering events that we put together for them would be obviously in that same context. What's interesting is that when you look at it, Wisconsin, Minnesota, Michigan sees very, very high THI in the summer. Even some of the highest I've seen have been in Delaware because of the humidity.
Mm-hmm.
Because the humidity is what drives, and they get, summer temperatures, but it's the humidity that can really, really exacerbate the temperature. But in obviously where Sean's at, it's obviously going to be mostly about the temperature because the humidity is, generally not going to reach a certain level. Great question.
Does anybody else have any questions for Jamie? Well, then we will go ahead and wrap things up. But thank you all for joining us. This was very informative, Jamie, and we are very excited about this new partnership.
Awesome. Thank you, Robin. Me too.